Hi everyone, good morning. I'm Irma from Performing Arts Forum and we're delighted to see you all on the call this morning. This information session is very much member-led because we've had so many questions on these topics over the last few weeks and months even. And we're really delighted that HLB Ireland responded to our request to collaborate on this information session with us. I'm really delighted to welcome tax partner Bruce Stanley, who's going to guide us through everything this morning. And a quick note to say that we are going to have a good list of resources on our website afterwards and an opportunity also for you to ask questions during the session. But for now, I'm really delighted to hand over to Bruce. Thanks so much.
Thanks, Evan. Hello, everyone. It's a pleasure to be here to present to you. I'm just going to start sharing my screen here and just get this presentation in place. So hopefully everybody can see that. Is that showing up on the screens there? Good. Okay. So yeah. This was by way of introduction. So I'm a tax partner with HLB Ireland, and we have a large arts and culture client base. So there's about 250 of our clients who are working in the sector. And I'm also on the board of Rough Magic and the Irish National Opera. So I'm very aware of the implications of these changes that are happening and how they're going to impact the sector. So they're obviously going to have an increase in costs and an administration burden for the theatre sector, and they're also going to have a big impact on freelancers working within the sector as well. So as you know, there's three topics that we're going to be looking at. The first one is determining employment status, and the second one is enhanced reporting requirements, and then the auto enrollment. So if anybody has any questions as we go along, if they could put them into the chat box, and then we'll pause it during each section and answer the questions as they go along. Okay. Sorry, I think there's a fire alarm going off in the office building at Worcester. Just one second. Anyway, I'll go through it. Determining the employment status. So the background to this is that in May of this year, Revenue issued a new manual providing guidance on determining whether an individual was an employee or self-employed. This followed on from a legal case involving the Domino's pizza delivery drivers. The intention of this change was that it would protect the employment rights of individuals working in Ireland, even if they were on kind of short-term contracts or precarious contracts. So it's important to note that this isn't a change in legislation. The tax law is still the same. This is a change in the interpretation and the guidance that Revenue are using when implementing the legislation. So the new legislation or the new guidance provides this decision-making framework. And there's basically 5 questions that you need to go through to determine whether or not somebody is an employee or a freelance contractor. So the first one is there a work or wage bargain? So is somebody getting paid to provide a service? And if there's no work wage, then there's no contract. So that's fairly straightforward. The second one is there agreement to provide personal services with limited substitution? So personal services can only be provided by an individual. So if you're contracting a company, then it can't be an employment contract. It can only be with an individual and an individual employee and an employer. The limited substitution reference is about if you employ somebody to do a particular job for you, can they send somebody else to do that work, or can they subcontract out some of that work? So, for example, if you had somebody who was building a set, can they get somebody else to help them with building that set or to do some of the work for them, which they would be able to? So they would have their own kind of substitution there. So that wouldn't have limited substitution, and therefore it wouldn't be an employment contract. But if you have somebody like an actor, obviously if you're hiring an actor, that's the person that you want to turn up on stage on the night. So there's no possibility of them providing a substitute. If there was a substitute, it would be the theatre company that would be providing the substitute, not the individual actor. The third point is then, does the business control the worker? So this is possibly the greyest area in the guidance, and they provided a lot of examples at the back of the guidance. There's 18 in total, and when it's considering what control is, it's quite broad. So in relation to actors, they're specifically mentioned on media that there is when actors are engaged, there's a where and a when. is decided by the employer. So therefore they are employment of contract, even though the employer mightn't control how the actor provides the services. There's a few different tests there in control, so we'll talk about that a little bit later on, because that's really the key area on these tests. I think that's the greatest area of them all. Then if the answer is no to any of those first three questions, then generally it's not an employee, it's a subcontractor. But if it's yes to all three of those, then we look at the factual matrix points to a contract of service. And these are kind of the old tests of whether somebody is providing their own insurance, if they can benefit financially, if they do the job better, if they're providing their own equipment, for example. So those kind of topics can put it back in where it's still back into freelance, even if the first three questions were answered positively. And the final point is about any legislative regime which says it's not a contract of service. So this is where you have a situation where you have somebody who maybe answers no on one of the first three questions, but they have to be an employee. So a typical example of this is if you have a company director. A company director is always an officer of the company. So even if the company doesn't control where, when, or how the director does their work, they're still considered to be an employee just on the basis because of their director. So that fifth question is a question that only kind of moves people back into an employment contract. So those are the five questions that have to go through on the framework. The guidance itself doesn't address theatre, but it does, or performing arts, but it does include a section on media. So I've just included that here because I think it's quite relevant. There's a bit where it says that personal service is the essence of the majority of engagements between a media outlet and its workers, such as actors, presenters, or journalists. As the business also generally controls when work is undertaken and where, they would also generally meet the control test. Due to the skilled nature of the roles, it is unlikely the workers will be told how to undertake the work, but the level of residual control retained by the business will result in the control test being met. This is equally applicable to other workers in the sector, such as camera persons, sound engineers, and producers. It does, so you can see that the level of control is kind of where and when. So if you have somebody that needs to be on set for somebody working in lighting, for example, then you're deciding where they need to be and when they need to be there. So that is sufficient level of control to meet that control test, the third question in the framework. Interestingly as well, just kind of the last question here relates to commissioned work. It says where a media outlet engages a person to produce content, it will subject to the framework generally result in the person being an employee in respect of that work. So if you have a playwright who's commissioned to write a play, they could arguably be caught as an employee, but I don't think it's trying to catch exactly that, and it certainly wouldn't meet all of the other tests because you wouldn't be dictating where or how they did the work. You might have it be dictating when it was delivered by, but I don't think that would be sufficient to meet the tests. But it's still worth noting in that context. So when we said that we were doing these questions, we put out we asked people to provide some Q&As or some questions that they'd like us to answer. So we're just going to go through this Q&A section, then I'll mention a few other points, and then after that we'll take any questions that anybody has on this topic. So the first question is, who bears the responsibility for correctly determining whether an individual is classified as an employee or a self-employed contractor? So the responsibility is entirely on the potential employer. So if a freelancer is treated as a freelancer and they file their taxes on that basis, there's no recourse against them because they've done everything as they should. But if an employer doesn't operate an employment contract when they should have, then the recourse is entirely on the employer. So the responsibility is 100% with the employer. It's not on the employee to make the determination. What are the consequences for an employer if a worker is misclassified as employed when they should have actually been classified, self-employed when they should have been classified as an employee? So what revenue can do here is they can impose fines for not correctly operating the payroll system, and they can also treat the net payment to the individual as a net salary and require the employer to regross the salary. So if somebody was at a higher rate, if there was a €5,000 net fee paid to somebody, the revenue could say that that was a €10,000 gross fee, charge 50% tax on it, and then charge the interest and penalties plus employer's PRSI. So the potential penalties for getting it wrong are quite high. In practice, if a freelance worker has returned the income and included it on their income tax return, then revenue will normally kind of allow that the tax has been paid on the income, and they may just look for the employer's PRSI on top, which would be about 11% of an additional cost. But that is a concessionary practice which revenue have been allowing in the past. So the third question, what must employers do to comply with the updated code of practice and decision-making framework established by the Supreme Court judgment in determining an individual's employment status? So I think the default position for most employers is going to be to treat people as an employee in most cases, because there's penalties if you don't treat somebody as an employee when you should have, whereas if you were more cautious and put a self-employed person through the payroll, then in that case, all of the taxes would have been paid in respect of that payment. You may have overpaid PRSI, but you're unlikely to face any kind of risk or penalties there. If you are deciding that somebody is self-employed and freelance, then it's important to look at the contract and to work through the decision tree and to just record why you have come to that decision that they are freelance. So whether that's on the substitution rule, or whether it's on the control rule, or if there's some other extenuating circumstances that mean that the individual should be treated as freelance, it should be documented and available then to defend the position, well, in case revenue asks. Question 4: the freelancers in the arts are typically considered self-employed and operate under contract for service, are responsible for managing their own taxes, including filing self-assessment returns and paying preliminary tax. Is this still the case? What would these examples typically be? So for freelancers, they will remain responsible for managing and filing their own tax returns if they are under a freelance contract. Again, it comes back to this decision tree and whether there is the substitution or the control. Somebody who's like building a set, for example, could still remain as self-employed, because there isn't that full level of control, and there's potential for substitution on work where they can get assistance with building the set. So that they could typically still be self-employed. Anybody who is kind of required to be on set at rehearsal, to be there at the performance date, that the level of control there is much higher for the production companies or the theatre companies. So they're more likely to still fall under the employment status under the new interpretation. So the fifth question was, how could or does this impact on deductions for business expenses? I think this is probably coming from the freelancer perspective of what deductions they would be allowed to make. So when you're a freelancer, the deductions you can make are much wider. You can deduct expenses that are wholly necessarily for the purpose of the business. When you're an employee, wholly and exclusively for business, they've got to be wholly exclusively and necessarily when you're an employee. So if you're a self-employed freelancer and you're running a business, then costs that you'll be able to deduct would be things like your telephone costs, your research, business development meetings, kind of all of those costs. When you're an employee, you can only deduct costs that are specific to that individual employment. So if you were an actor, for example, you would be able to deduct your agent's fees if you had those applicable to that particular event from your payroll. So you would still be able to deduct some costs, but they would be much reduced in what you can deduct. So number 6, what about actors not on the payroll? Is this still possible? It seems very unlikely. I can't see how an actor, or in very limited circumstances, couldn't be an employee. There's generally no ability for an actor to substitute somebody else to go on in their place. At least not, it wouldn't be their decision. The level of control, the where and the when of the performance is controlled by the production company or theatre company. So the control is there. So I don't see a situation where an actor wouldn't be on the payroll when they're engaged in that manner. The next question then, what about production managers, designers, crew not on payroll? So again, this all comes back to that substitution and control issues. So things that they would also look at in relation to that fourth question is whether or not somebody can be working on multiple jobs at the same time. So if you have the ability to go and contract on other jobs, that kind of indicates that you're not completely under the control of one contracting party. If to that one job for a specific period of time during the run of the show, then it's likely that you are going to be treated as an employee, I would think, just because of the control level. It's difficult to see again how crew wouldn't be on payroll. So that's likely that they would be included there. But each contract would need to be looked at on a case-by-case basis, and within that decision tree to make that decision. So next question is, what about speakers or performers brought in for a conference or event as in a single engagement? So the guidance is very clear on this, and legislation, and I have the quote later on, that if it's even just one single gig, then it's likely that that will almost certainly be an employment. So there is examples in the guidance where if a speaker comes in for a conference and does a single event, there's no substitution available because they've been paid to come on board, and the event is at a specific date, at time and venue. So therefore, that's all being controlled by the employer, even if they don't control what the speaker is going to be talking about. So in all those circumstances, it would be treated as an employment under the current guidance. The next question is, many artist development programs now offer an honorarium stipend to cover an artist's time. Should these be on payroll? So I think these shouldn't be on payroll, because I don't think with the honorariums there is that level of control. I don't think it has that same employer-employee relationship for those. So you would have to again look at exactly what the conditions around the honorarium is. But my feeling is that generally they would be outside of payroll and wouldn't be included. And then the final question we have in this is, what do freelancers need to do to understand their tax obligations and the factors that could impact their employment status? Well, I think that the employers are more likely to be cautious and looking to engage people under an employment contract, and really the risk is with the employer rather than the freelancer or the employee. So the tax obligations for freelancers, if you are still freelance, you still have to file your corporation or your tax returns, and you need to include the PAYE returns on those. If you are being kind of moved into an employment role, then it's important to get your tax credits and cut-offs applied to that employment, so you don't suffer emergency tax, and just to manage your tax obligations in that way, from a cash flow point of view. And it's also important to understand what you can deduct as an employee as opposed to as a freelancer. But it is really up to the production company or the potential employment company to determine whether or not the individuals they're engaging with are freelancers or employees. It's not an obligation of the freelancer to make that decision, although they can obviously have input into it. There was some other points here I just wanted to note that weren't questions specifically asked. So the first one is, in the guidance, it does say there does not need to be a continuity of service. In effect, a worker engaged to carry out one job, gig, or shift will generally be an employee for tax purposes for that one job, gig, or shift. So if it's even only one single night of employment, that still has to go through the payroll. You have to do the payroll process and do the pay slips. All of that requirement from the administration is required. So the second point is that if you're invoicing through a company, then you would not be treated as an employee of a contracting party. So this is a way, if you were an actor and you were invoicing through a company, you don't get treated as an employee. Obviously, if you want to take money out of that company, you would be an employee of the company that you would then be invoicing through. It can help you to claim additional expenses if you are invoicing through a company, but there are additional costs with running a company. So usually it's not very cost effective for people to manage the situation in that way. The third point then is the EU Commission is currently working on proposals in relation to employment status for the gig economy. Those changes haven't been announced under EU law, but whenever they are, they will be incorporated into the revenue guidance. The EU legislation is looking at protecting employment rights, so it's more likely than not that they will be falling in the favour of any gig economy workers being included as employees. But in the event that there is any changes in the EU legislation, that will work itself into the Irish legislation. For the moment, though, the gig workers are definitely included. And the final thing just to note is if you are freelance and going forward you're going to be an employee, when you're freelancing under your PRSI class is Class S, and if you pay your minimum Class S contributions, which is €500, if you pay at least that covers you for a full year PRSI contributions of 52 weeks. If you're an employee, you're generally under Class A, and that's a weekly record of PRSI. So if you were working kind of 40 weeks in the year, if you were doing it as a self-employed under Class S, you're covered for the full year for your social insurance costs. If you were doing 40 weeks as an employee, you're only getting 40 weeks of contributions in the 52. So that can have an impact on your contributory state pension. So it's important then that that's managed, that if you are an employee during periods where you're not actively employed, that you're managing your PRSI costs. So I think that's all I have under that first section. Is there any questions there that anybody would like me to answer or clarify?
There's a question in the chat there.
Yeah, there was one in the chat. I'll read it out. It said, how will they manage the requirement to make everyone an employee, sick pay, holidays, pension, etc.? A lot of places run the payments through PAYE to take tax and PRSI, but no change in employment status. I can see this continuing until it gets notice reported. Will the ex-freelancer be sent an employee contract? So maybe that's a situation where somebody, I'm just trying to imagine a situation, say, for example, maybe a production manager in the past who was on a fee would have a change in circumstances then. So maybe that would be an example to imagine. Would they need to be sent a new contract to say that they're now an employee? And then they would have the rights to things like you probably will be applying 8% holidays pay to the end of their contract, things like that, I think is what that question is asking.
Yes, I think that's correct. They would be entitled to the full employment rights. That's part of why the case was taken, to get employment rights for individuals who are under an employment contract. So there should be a separate employment contract. You should have employee handbooks. There should be kind of policies, grievance at work, dignity in the workplace policies. So every employee should be provided with all of those policies. So yes, that kind of the employment rights, all of them should be applied in that circumstance.
I don't see any other questions there at the moment, Bruce, but maybe we can keep moving, and if more questions come through, we can come to them at the end.
Okay, perfect. So the next one is the enhanced reporting requirements. So this is a new requirement which was brought in by the revenue in order to get information in relation to tax-free payments that were being made from employers to employees. So it came in effective from the 1st of this year, and it's only in relation to 3 different types of payments. So there are the small benefit exemption, travel and subsistence, and remote working. So the small benefit exemption is where an employer can provide up to 2 tax-free non-cash benefits to an employee in a year, up to an aggregate value of €1,000. There was an announcement in the budget last week that this is going to change up to 5 benefits in the year, up to a maximum of €1,500. But it's not sure whether that's going to come into effect from the budget date or from the 1st of January 2025. That will be clarified probably next week when the finance bill is published. Typically, these take the shape of kind of a voucher at Christmas or a one-for-all card, but they do include any benefit. So the revenue guidance references that if an employer gives Easter eggs to employees at Easter, that would be considered one of the two benefits that's been provided, so that that Easter egg should be reported. So it is any non-cash benefit that's being paid, whether it's kind of flowers, a bottle of wine, anything like that gets covered. The travel and subsistence, that would include per diems. It includes vouched and unvouched expenses. So vouched expenses would be where somebody incurs a hotel bill and then the company reimburses them for that. Unvouched would be the likes of the per diems, or if you're paying the civil service mileage rates or subsistence rates, then they need to be included. There's also a mechanism if you do provide somebody with a float in order for them to make payments. So there's an advance payment of travel and subsistence. There's a mechanism to deal with that as well. And then the remote daily allowance. This is a payment that's available to employees who are required to work from home part-time or full-time, and it's a payment of €3.20 per day that can be paid tax-free. It's important that there's a requirement to work from home there. It's not just that somebody decides to take their work home with them. They can't claim it under those circumstances. So those are the three that are covered. Anything else isn't included in the reporting requirements. So the questions here, when do these enhanced reporting requirements take effect? So they are in effect now. Currently, they took effect from the 1st of January 2024. If people haven't been filing, they need to look at it before the end of the year and include any payments that have been made up to date when they are starting to make their returns. The second question is, what additional data must be collected and reported under the new requirements? So there isn't really any additional data that needs to be collected. All of the information that should be collected is just in line with what should have been collected before. So in relation to the small benefits, the nature and the value of the benefit and the employees that it was provided to should have been recorded. For the travel and subsistence, it's whether it was vouched or unvouched. If it was vouched, the receipt should have been kept. If it's unvouched, then the nature of the payment needed to be recorded. So if it was mileage, what the business trip was, what the total mileage done was, where the trip started from and where it ended. So that should all have been collected. And then the working from home allowance, again, the number of days that people were working from home, who the employee was that the payment was being made to, and the rate that was being applied should always have been recorded. So there's no additional data collection there. What's reported in respect of each of them for the small benefit and the travel and subsistence, all you report is the person the payment was made to, the amount that has been paid to them, and the date that the payment is being made on. So the reporting needs to happen on or before the day the payment is made. So it shouldn't be reported retrospectively, although we can do for this first year while people get used to the system. For the working from home allowance, it's again the person that was paid to, the amount, the date of the payment, but you also have to record the number of days that you were paying for them from working from home. So that's what needs to get reported there. Also, if you are paying somebody for kind of multiple travel and subsistence claims, you only report the amount in the payment. You don't have to report each individual claim that they've made. You just, if all of those claims are being paid on the same day, you just put in the total. You don't have to break it down. The third question, how will enhanced revenue reporting impact payroll processes? How do I report? So there's two different ways to report. Then if you're using a payroll package, many of them have an integrated system where you put in the reporting requirements, and then the payroll package will submit the information to revenue through the revenue online system. And if you don't have that facility on your payroll package, there is a mechanism where you log into ROS, and then you have to kind of step-by-step work your through it, enter all of the details and complete it. There's a very useful guide which the revenue commissioners produce, which kind of has the screenshots and shows you step-by-step exactly how to enter the enhanced reporting, so that it's very intuitive. So that will be one of the resources that we'll provide to people after this, so you will be able to see it. I won't go through it here because it's about 40 pages long, but it is very clear on how you do the reporting. So that's a good resource to check. So the next question, are there any penalties for non-compliance with the enhanced reporting revenue reporting? What happens if I don't report? So revenue confirmed that they're not going to apply any penalties up until the end of 2024 while people get used to it. But they want to see that people are making an effort in order to be reporting. At the moment, in the specific section, it doesn't refer to a penalty, but for non-compliance with reporting obligations, generally the fine is about €3,000 for not reporting, and then there's €4,000 if you for continued failure to comply. There's a lot of penalties for taxes or tax geared penalties, but there's no tax on the tax repayments, so it's likely that it'll be a fixed fee penalty that would apply. Let's say it's not going to apply for 2024, but it's important that people do start reporting in 2024, and that it is in place for 2025, as that's likely when revenue will start to impose penalties. The next question is, are travel and subsistence expenses reimbursed to staff on payroll reportable? Yes, they are. Any travel and subsistence that's paid where it's tax-free is reportable. Travel and subsistence expenses reimbursed to freelancers on fee reportable under the ERR. No, they're not. They're outside of the scope. It's only to employees. So the freelancers are not included. Are travel and expenses paid to board members reportable? So they specifically are. So it refers to a situation where you have a director who's not on a payroll, which may be the case for a lot of arts companies for their directors. So if they're not on the payroll, there is another mechanism to report it, but it does have to be reported for the directors. There is an exemption in the guidance for volunteer workers, where the only thing that the volunteer worker is paid is the travel and subsistence. And although board members are volunteers, it does specifically say that they are, because they're directors or officers of the company, so they need to be reported. But if you have other volunteers working in the organization and they're paid travel and subsistence, that doesn't have to be reported, as long as the travel and subsistence is within the civil service rates and they're not receiving any other payment. Question 8, what are the small benefits falling under the small benefit exemption? So the small benefits they're very broad, and they're basically anything that an employer gives to an employee other than cash. So typically it would usually be vouchers of some sort, but as I say, the revenue guidance refers to if an employer gives an employee an Easter egg, that counts as a small benefit. And so it is generally anything that's given to an employee that isn't cash and is for the benefit of the employee. The next question, do I have to report the daily working allowance of €3.20? Yes, that is one of the reportable payments. So if that payment is made to an employee, then it is included in the reporting requirements. Then just a few other points to note. If your expenses incurred on a company credit card, they're not included because they're not being reimbursed. They're just the company is paying for them upfront. So if you are giving somebody a company credit card in order to pay for travel and subsistence, then that's not a reportable mechanism. There is a mechanism to deal with advance payments. So this would be if you were giving somebody a float in order to pay for meals for the crew. You do have to report the payment when the expense claim is made, rather than when the actual cash payment is provided as part of the float. But there is a mechanism for doing that. And also there are demonstrations available on the revenue website which explain very clearly how the reporting is done, and I'll say we'll add some links to that, which will circulate to everybody after. And that's all I have there on that. Is there?
There are some questions actually, Bruce, and there are some follow-on questions from the first section as well, but maybe I'll do these enhanced reporting ones first and then we can come to those as well. Someone has popped a question in about CE workers. I presume that would be the same as the volunteers, would it?
Yes, I would think so. Yeah.
Someone's asked a question about an employee leaving gift. Does this have to be treated as a small benefit? If the gift is purchased by the company, so if the gift is purchased by the company with contributions from colleagues, does the full value need to be reported or just the portion covered by the company?
We haven't seen that in the guidance. I would think it's just the portion covered by the company. It would be a gift from an employer to an employee, but it would only be the company side that would need to be reported. So I think if that would, yeah, I think it would have to be just the employer amount, because otherwise, if the employees all gathered together and they went over the €1,000, if you were in a very large organization, then you'd go over your small gift, so that wouldn't make sense. So I think it'd just have to be the employer contribution to the gift.
Somebody also, okay, I'm going to just go this way. Hold on a second. You've already covered this. It's only for people on payroll. So per diems and are frequently paid to non-payroll personnel. So you would imagine that, for example, back to our original point about maybe a designer going on tour with the show or something like that, they might be paid a per diem with that. But in this enhanced reporting, that's not going to be something to be concerned about. Is that right? Unless they're an employee.
Yes, correct. Unless they're determined to be an employee, then they're outside of the scope. So if they're being treated as freelance, then it's not reportable. The only if there's a board of directors who are receiving travel and subsistence payments, they wouldn't be on the payroll, but they would be included in the enhanced reporting requirements. But for freelance workers, then that's fine.
And there's another one here. What is the impact, if any, to the employee of reporting a small expense via revenue? Why does revenue want this data?
So there's no impact on the employee. What revenue want to do is they want to monitor how much these benefits are being utilized, and they also want to see that they are being utilized correctly, and that there isn't excessive tax repayments being made to employees. That if you have to report every benefit, then revenue will see that there's only 2 being reported in the year. If you report a third one, then they'll know that something's wrong because the third one is taxable. The tax obligation falls back on the employer, not on the employee. And so it's really an information gathering exercise by revenue.
There's a few more questions came in from the earlier part about the determining employment status. Would it be okay to cover those ones now? So one person asked a question about calling crew for a 4-hour call for one day, for example, during a get-in. Would they now need to have them set up as employees?
So yes, if you're determining where and when they were going to be, and it's the individuals that you're engaging, then I think you're meeting that there's no substitution and you control where and when they will be, so doing the work. So I think they're caught.
And someone else has gone back to that. Would all these things need to happen even if a person is delivering a lecture once off event? If we regard a lecture once off event as an honorarium, does that remove that requirement, or would they still be considered an employee?
Again, it depends on the terms. So in the examples that it provides, there is one, I think it's example 14 in the guidance, which in relation to an actor, and the actor is providing workshops to students in a local school, and in that case, there is kind of the substitution. But interestingly, under the control part, the actor provides their availability. So they say when they will be able to do the work, and then the school kind of selects a date from the actor's availability, and that's when the work is carried out. And under that circumstance, the revenue guidance is that they don't have sufficient control, and the actor would be self-employed in that case, because it has to be carried out at the school, of course, because that's during school hours. So when it's being carried out in that sense is being under control. But the fact that the actor is the person who dictates when the availability is rather than the school, that that remains a self-employed. So you can see that's quite a grey area. So if you have a lecturer, if the lecturer gives you the dates that they're available, and then you choose that date, a date from their availability, they're determining when the work is being carried out. So there's not that level of control there. But if you're hiring somebody to provide a lecture on, on an opening night of something, then that's a specific day and time that they have to be there. So the control is back in place. So that would be an employment.
That's a very tricky one, I think, isn't it? Just to be setting people up on payroll, I guess, is going to have a much greater burden on arts organizations and organizations in general in terms of the extra, just the extra admin of all of that.
Yeah. No, it is definitely. I think like a lot of schools at the moment or universities, if they have a guest lecturer, they always put the guest lecturer onto a payroll. So that's my understanding at the moment.
Someone else as well just asked for clarification about a freelancer should pay €500 for the entire year for class S and then have payroll intermittently throughout the year to be fully covered for the year. That's correct.
So if they're paying their class S of €500, they're fully covered for the year. They mightn't have to pay the full 500 depending on how much their freelance income is and how much class A they've paid. So there can be a situation if you have a very small amount of self-employed income, but you have kind of other employment income, that you only need to kind of top up a smaller amount of class S. When you do your tax return or you get your accountant to do your tax return, the revenue online system calculates that automatically. So as long as you are paying class S, though, you should be fully qualified for the year.
And someone has asked another question about so in this case they might be an artist who has received an Arts Council project award, I would imagine. For the first question is, do they class this as income? And then they're wondering about then if they're using that award to research with other artists, would they be setting them up as employees? So that could be a number of different situations. It could be quite a small award potentially from the Arts Council, but they might be using that award to research and develop something. What would the situation be there?
So the Arts Council award would generally be treated as an income. So normally you have to kind of prepare an income and expenditure account to kind of provide to the Arts Council at the end of the project that gets signed off. And the artist would retain a certain element of it for their own as their share of the grant. If they're engaging other people, again, it really falls back to the terms of that, what they're engaging that person on. If it's somebody who's helping them with research, you would look to the level of control that the person making the payment has over the person receiving the payment. So if they have to be doing the research in a specific location at a specific time and have it deliverable by a certain date, then if that's all controlled, then you would be looking at an employment situation again. If it was looser than that, which I think it would be in most circumstances, it wouldn't normally be an employment contract. But it does, again, it's just a case of going through that decision tree and just setting out what exactly the levels of control that the payer has over the payee.
And then there's another one here just around going back again to that question about the lecturer delivering the kind of the one-off, or maybe a panelist on at a conference or something like that. In that situation, then if you're treating them as an employee, you'd have to provide them with employee handbook, give them access to your policies, have them read, they obviously refer them to Safe to Create training, etc. That would be the case, wouldn't it?
Yes, technically that's if they're an employee, they have all of those employment rights. Yeah.
Another one, sorry, that this seems to be the hot topic, understandably. There's another one. If a dramaturg offers a selection of dates to a theatre in order to deliver dramaturgical support advice, could the dramaturg be employed as a freelancer? So there, I suppose is there a question around the control then?
Yes, so I think this goes back to that example that Revenue have. If the dramaturg is the one who is offering the services to the theatre company and saying these are the dates I'm available, then they are more in control, I think, of of when the work is being carried out. And they'd obviously be in control of how the work was carried out because the theatre company wouldn't dictate that. So the majority of the control would be in the dramaturgs under their control. So I think that would be a self-employed situation.
Okay. And then the last one here is just back on the enhanced reporting requirements. If we decide to have Revolut business cards or Clever cards for employees for travel and subsistence, would these be considered company credit cards?
So if they're in the name of the company, then yes, they'd be. But it can be a credit or a debit card. It doesn't have to. Sorry, I wrote credit card, but it could be a debit card either. Um, yes. So it's if the employee isn't making an expense claim to the company, looking for the company to reimburse the employee, then it's not reported. So if it's on a credit or debit card, as long as that card is under the company's name and the company is paying for it, then it's not reported.
Brilliant. Okay, I think that's the questions. Actually, sorry, one just popped in. If an actor comes in to perform for a one-off tour, is he an employee? Possibly yes, if he had to attend rehearsals. A one-off tour. I think yes, they are an employee, right?
Yes. Yeah. Um,
Oh, I think I think they've clarified to say like reads. So does that mean maybe in that question that somebody maybe has become ill and so you need to bring in somebody at short notice? I think they would be an employee, right?
It would be if he like the guidance is if it's one gig or one shift, then you're still covered. So it goes back to the control. You're deciding that it's a personal service from that actor, and you're deciding where and when they're going to be performing. So that's covered.
Um, Sorry, I know I'm switching between a couple of things here. One is also just come in because I suppose we do have a lot of individual artists who might receive project awards, but might not be set up as a registered company, but would be in this case, they would be producing, say, a one-off show, dictating rehearsal show times, deliverable dates, etc. So if they're not a registered company, they are still an employee. So they would have to, what would they need to do basically? Should they get outside payroll support, for example, to run their payroll, or what should someone in that situation do?
Yeah, if you're an employer, you don't have to be in a company to employer. If you can be a sole trader who's employing other people. If you need to operate payroll, there are outside payroll services that can help. HLB Ireland, we provide that service to clients, to self-employed individuals. So but there are other firms that will do it as well.
Yeah, I guess it's an interesting question because I suppose at the moment, because of the way people are funded, in a lot of cases, they will maybe come together for one particular project and be funded for that and do everything correctly, obviously, in terms of paying everybody. But maybe they would not, maybe they might be some of the places where people were being paid fees, even if they were actors, because they didn't regard themselves as having the need or maybe the capacity to factor payroll into that. But I suppose it's important to mention there that you can use outside services, even if you are not a company, to help you with that.
Yes, yeah, I think so. Like it does seem kind of very unfair in a lot of these circumstances, where I think the people receiving the fees don't necessarily even want to be treated as employees. That there isn't that push from the industry for people to be treated as employees. But it's unfortunate that the legislation or the manual is kind of trying to catch all parts of society, and it doesn't really take into consideration individual sectors. So
Yeah. Yeah, I think that's the case. I mean, I think that's something that maybe just thinking about it, in terms of the additional cost in terms of capacity, basically, and people to help with these kind of things, where they're maybe going to need to be factored more into budgets going forward, because there is going to be a requirement to just have more capacity basically built into teams to help support this. There's another one here about an artist receiving an exhibition payment fee. The timing of the show determined by their availability, and the Art Centre programme. Is that artist an employee? So I imagine that could be more in the case of maybe an art centre with a visual artist. So they would be, maybe traditionally would have been paying that artist a fee. I would imagine that that's still a fee. I don't think that they would. You're not requiring them to make the pieces at a certain time. You're just requiring them to hang the pieces, really, and to be there for an opening or something like that. But that's probably still very much not an employee situation, I think.
yeah, I would tend to agree. Again, it's a little bit of a grey area, but I think the vast majority of the work in that case is being done by the artist, at the location of their choice, in the manner that they want to do it, and at the pace they want to do it, and that while they're doing that, they can obviously take on other work, so they could be doing a number of different projects at the one time. So I think there's not the control by the exhibition centre over the artist in that case. So I would think that's not an employment contract. That would be a fee.
I think as well, somebody's asked a question about the artist tax exemption status. So there you might be looking at someone, for example, a writer. I think that playwright question that you talked about earlier, can realistically, the control there is different, because you don't mind when and where they write the play. You just need them to deliver it to you at a certain date. So that remains quite clear, doesn't it? I think.
I think so. The only thing that was a little unusual is in the media question there. It mentions about commissioned work. For if you commission a journalist to write a piece of work, then that's considered to be an employment. But I think it's commissioned around a specific topic and has to be delivered on a certain date. So I think that's probably more prohibitive. I think with the playwright, that it would still remain independent. That I think that would be a fee. Obviously, it has to be a fee in order to get the artist exemption. You can't get an artist exemption in respect of PAYE income. So it's important that it would be. But I don't think that's what that example was trying to capture.
Yeah. And the last one here is, there are quite a lot of art centres around the country who would have artist in residence. So in this situation, they may be. I think the arrangements here differ. Some of them probably are already considered employees and on payroll, and some of them might be receiving a stipend, or something towards that. So if they were in a situation where they were receiving some sort of a fee or stipend, is it probably the case that now they would be considered an employee, or that might depend on the specific circumstances of the nature of the requirement?
Yeah, exactly. I think it depends on what the obligations for the artist, what duties they're required to perform, and the where and the when and how. All of those factors need to be looked at. So it would be on a case by case basis. I don't think they're automatically employees, but it would be important to kind of go through that documentation process as to why they wouldn't be, if that's what the determination is.
Okay. Another one here. Do contracts with freelance artists now need to reflect these requirements, i.e. that they are not solely employed by the organization, that they can deliver their work on selected dates, etc.? I suppose the
Well,
question then is, will the contract help you in terms of the control aspect of that?
so the contract, it will be the actual conditions. So the contract, you can't have a contract that just says somebody is self-employed, that and then have all of the conditions that they would be an employee. You would need to actually see that the conditions were being carried out. So, for example, you couldn't put in a clause that says the individual can provide a substitute if the reality is that they never would or never will. And that wouldn't get you out of the substitution clause just because it's in the contract. Revenue will look to see the actual nature of the engagement between the parties. But to the extent that there are conditions between the two parties that support self-employed or freelance treatment, then they should be in the contract. So they should be specifically called out.
Yeah. Okay, and the last one here is, how will it be ensured that the new status employees are given their full employment rights, sick pay, pension contributions, holidays, etc.? What should they do if this is not done?
It isn't done. Well, if an employee is unhappy with that they felt they haven't been given their proper rights, there is the Workplace Relations Committee, the WRC, they can make an appeal there. It's a reasonably straightforward process, and you need to make an appeal within 6 months of the cessation of the employment or the infringement of the employment rights. So that would be the first port of call. Well, you would question the employer first, and but the WRC is the recourse method for employees.
There's a question here which you might not be able to answer, but I think it's a really interesting one, which is there any guidance on accountancy fees for correct reporting, both for an individual and an organization? So I guess what this question is kind of saying is, like, I think what a lot of the comments on the chat are reflecting that this whole situation is going to, while everyone's completely on board with more rights for employees and more benefits, which makes complete sense, but the reality is that it is going to require extra capacity and resources. So maybe it could be a case where people might be able to budget for that in their Arts Council application budgets, etc., but that they might be able to get outside support to help them meet the requirements. So it would be interesting to kind of start to think about the sort of guideline costs that people might need to assign in their budget lines.
Sure. I think the guideline cost possibly depends on what the internal resources are, what external resources are needed, and the size of the organization. So, like the enhanced reporting isn't a huge extra cost if you have to produce a lot more. If you're doing a lot more payroll, then obviously that's an increased cost. But it's really on a case-by-case basis of what the cost will be.
Okay, thank you so much for that. I think we can probably move on to the last part, I think.
Okay, so the last part is the auto enrollment section. So this is it's a new pension savings scheme which is launching next year in September, 30th September 25. So it's been put back again. Eligible employees are automatically enrolled with contributions from the employees, the employers, and the government. And the idea is that this will help people to build a pension pot, which will then supplement the state pension. So this isn't replacing the state pension, it's a supplement to it. The people that are included are anybody who earns over 20,000 a year, if you're aged between 23 and 60, and you're not already in an employer pension scheme. Then the rates. So the rates for years 1 to 3 are going to start off at 1.5% for the employee, the employer, and the government, and 0.5% for the government. 4 to 6, then it's 3%, 3%, 1%. Years 7 to 9, 4.5%, 4.5%, and 1.5%. And then year 10 and afterwards, it's 6, 6, and 2. So that the intention is that everybody who is auto-enrolled will be paying in 14% of their pension, or 40% of their salary into a pension pot. There's no tax relief for these pension contributions. So it's a straight 1.5% that comes off of an individual's salary without the tax relief, and then the government kind of tops it up, and the employer has to make a payment as well. So that's how it works out. So the questions on this: so what is auto enrollment? When does it work? How does it work? So it's an automatic obligation on employers that are employees to be joined into a pension scheme. And once you meet the conditions, which is the €20,000 per annum, the age bracket, and if you're not already part of an occupational pension scheme, you are automatically enrolled for this pension, and then that carries forward for a period of at least 6 months, and then you can look at opting out of the pension. But everybody is automatically kind of put into the system. The auto enrollment is going to be managed by a government agency. So the obligations on the employers is to withhold and pay over the payments in line with those rates above to the revenue on the payroll taxes, and then the government allocates those payments to the individual's kind of pension pot, and the government manages it. And there is some choice between whether you go to a low, medium, or high risk investment, but there's very limited choice. The government pretty much manages how the pension pot is managed for each individual. The second question: who will be affected by auto enrollment? So that's again in those categories. If you don't already have an existing company pension, if you're between 23 and 60 and you're earning over €20,000 per annum, those are the people that will be included in the auto enrollment. It also affects employers, because the employers will have to make the additional contribution, so there will be an increase in the payroll costs for employers. What are employers' obligations under the auto enrollment scheme? So whenever an employer will have an employee, the revenue commissioners of the government will inform the employer through the payroll systems of whether or not the employee is included in auto enrollment, and they will also tell them the deductions that need to be made, and then it's up to the employer in order to make the appropriate deductions and pay over the amounts to the revenue. So the employer doesn't have to kind of manage the pension or set up anything in relation to a pension. It's simply a collection of the funds in accordance with the information provided by revenue of who's included, and then a payment over to revenue. The employers at the moment have to provide access to a PRSA to employees if they require it. That requirement doesn't go away because of auto enrollment. And this is just an additional requirement that if an employee isn't under a PRSA, that they are then put into the auto enrollment scheme instead. What are the contribution rates for employers and employees? So they are changing, and those rates of 1 years to 3, 4 to 6, 7 to 9, and 10. They're from 2025. That's not your first year of joining to your third year of joining, or so on. Those are the rates that are going to change over the 10 years while it comes into place, and it's to get used to employers having to contribute those levels. How do employers communicate auto enrollment changes to their staff? It probably should be included in the staff handbook, and if there's existing staff, then I suppose you would communicate it just however you internally communicate that type of information. It should be in writing to the staff in some format, though. So I would think the staff handbook is the natural home for it. That's that. 6. What happens if an employee opts out of an auto enrollment scheme? So if you can opt out after 6 months, and if you do, as an employee, you get your first 6 months contributions back, then you're automatically enrolled again every 2 years, and then you can opt out again. So you have to continually opt out every 2 years after you get put in. And at the start, you can opt out if there's an increase in if there's an increase in the contribution rate, there's an opportunity to opt out at those stages as well. You can also suspend your payments. So if you've built up a pot into in the auto enrollment scheme, you can suspend your payments, and then there's no further contributions get put in for a period again of 2 years. Then you're automatically enrolled, and then if you want to suspend your payments, you have to opt out again. So there's no penalty for an employee who does opt out. It's just that the contributions don't get put into their pension pot. How will auto enrollment impact processes? So from the payroll processes point of view, it should generally be managed by kind of the software systems. But when you download the information in relation to the employee, where you normally get their tax credits and cutoffs from the revenue, that information will also include now whether or not that individual is subject to auto enrollment, and whether or not those deductions need to be made. If they do need to be made, then that has to be managed through the payroll, where the 1.5% is deducted from the employee, and then the employer 1.5% contribution is added, and then that's remitted to the revenue, and then they'll manage the pension pot from there. Are there any penalties for non-compliance with auto enrollment? Yes, there will be penalties. I'm not sure what they will be set at, but if the employer doesn't make the payments to revenue, for example, then that is a tax default, and there would be penalties for the employers on that. There isn't really a non-compliance for the employees per se. They can either opt out or suspend or contribute, but it's not an issue for the employee, it's just for the employer. Can employers choose their own pension provider for auto enrollment? No, they can't. The auto enrollment it's a government run scheme. All of it goes into a government pension scheme, so it's not for that purpose. Employers can still provide a PRSA or provide an occupational pension scheme, and employees may prefer to go into that scheme. And if they are in the occupational pension scheme or the PRSA through the employment, then they don't qualify for the auto enrollment because they're pension funding themselves. For some employees, the tax relief on a personal pension fund and the contribution rates may be preferable to the auto enrollment. So it's not necessarily the best option for everybody to go auto enrollment. The PRSA may be a preferable way to do it. The auto enrollment is also, it's limited to a total, which is kind of reasonably high, of €80,000. So the most that an employee could contribute is 1.5 in years 1 to 3 is the 1.5% of that. Whereas if you were an employee earning 80,000, depending on your age group, you can contribute much higher, 15-20% or higher, into your pension pot. So you can build your pension pot a lot quicker. How will auto enrollment affect existing pension schemes? Well, it doesn't really, in the sense that if you have an existing pension scheme, you can continue to do that. If you wanted to cease your existing pension scheme and go into auto enrollment because you felt it was a better option for you, then that's an option, but there's no obligation to change your existing pension schemes. They're still in place. And then the other points to note. So it's going to start from the 3rd of September 2025. So that's obviously a year away. So there may be 1 or 2 changes between now and then. It does apply from day one if it's clear that the individual qualifies for auto enrollment. If it's not clear, then it can take up to 13 weeks. So if somebody is on a short-term contract, or if they're on a 1-day gig payment, it might not be clear whether or not they're going to be kind of at the €20,000 limit, for example, for the year. So if it's not clear, then it can take a time for it to kick in. But if it is clear that if you have an individual who's kind of already earned 20,000 this year and they're on as an employee, then it operates from day one. If you have more than one employment, then it can apply to each of those employments. So it's not an individual employer requirement. So if you're doing 3 different jobs in the year, each one of those employments can have the obligation to comply with auto enrollment. Said there's an option to suspend instead of opt out, and that's an automatic one, and there's an automatic re-enrollment after every 2 years, so you have to continue opting out. Your savings pot, it moves from job to job. So at the moment, if you have an occupational pension scheme, if you contribute to an employer scheme, that's in their scheme, and then if you go to a different employer, they will have a different scheme. Under this, because it's a government managed pot, it's the contributions that are coming from all of your various different employments would go into just one pot. So it follows the individual from job to job, and it's not a stationary pension scheme in that sense. It is in addition to the state pension, so it's intended to create more finance for individuals in their retirement, but it doesn't replace the state pension. If you were on the non-contributory pension, which is means tested, then this pension pot will be part of that means test, but it doesn't replace the contributory state pension anyway. And then finally, the contributions are your personal property. They're not accessible by anyone else, by which we mean that if the money that goes into the pot for you, that's not like with PRSI, where the PRSI is raising money for social welfare and then is used to pay social welfare payments, including other people's pensions. So your PRSI contributions are used to pay general welfare payments, and then when you retire, and the PRSI payments by the next generation are used to fund your pension payments and social welfare. On this case, the money that goes into your pot is specifically held and built up for your own benefit, and it's not payable out to anybody else, or it doesn't fund anything else other than your own pension. And I think that's all I had on that. Sorry, we've gone a little bit over time here. Sorry about that.
There's a few questions here. For auto enrollment, is it that you are enrolled if your income from a single employer is at least 20,000, or are you auto enrolled once your cumulative employments reach 20,000?
My understanding is it's the cumulative. So it can be from different employments. So it's cumulative. It's not just from a single employer.
Another one, does the contribution come from an employee's salary, or is an additional cost to the salary that an employer must pay?
So it's both. So the employee has to make the contribution. So in year 1 to 3, that's 1.5% contribution by the employee. Then there's a 1.5% contribution by the employer as well. And then the government does the 0.5% contribution. So it's both.
And I think you've covered this, but in terms of opting out, a formerly freelance person who hasn't been taxed at source but is now going to be deemed an employee will have auto enrollment, basically, depending on their threshold, right? In next September.
Yes.
And if access to a company pension is currently limited to successfully completing probationary periods, 6 months, what happens here in terms of auto enrollment?
I didn't see that in the guidance. I would think that if you were qualifying, I think you would automatically be enrolled for the first 6 months. And then if you wanted to go into the employer's pension scheme, you could do at that stage, and you could, if you want, either just leave the auto enrollment 6 months payments in there, or you could opt out at that stage. You get a refund of the payments, and then you could put those payments into the pension scheme, or if you wanted.
So it sounds like company handbooks are going to have to get updated, really, aren't they, closer to the time to reflect kind of this? How will the gross pay threshold be determined for employees who are paid on flexible hours, or for new employees who are on short-term contracts that may be on and off payroll throughout the year?
Yeah, so I think this is where revenue are saying that it's not clear if somebody will or won't be over the threshold. So and it can take up to 13 weeks. So I think what they would be doing is looking at kind of the term of the contract and what the individual is likely to be earning. They may look at kind of a previous year, but it's really the revenue will be determining this. So it's not the individual or the company that makes the determination. It is revenue.
Okay, I think they're all the questions on the auto enrollment, and I know that there will be loads more information on that coming, but there's 2 final ones, and then I think we will have to stop, but there's 2 final ones on determining employment status. If you're a designer, for example, or sorry, if you're working with a designer, say, for example, a set designer, and they have 1 week on their contract where you do control their hours. So you don't mind up until that point where they design the set or what, what time they do it at, etc. But in terms of tech week, you do need them there to be part of the get in and the part of the set, all of that kind of thing during tech week. So they're how do you account for that? Are they self-employed? They're self-employed for most of their contract, but become employee for that 1 week, or how would you regard that? Or because that would be really typical, actually, that situation.
Yeah. I don't think you would split it where you have self-employed and then employed for 1 week. I think the contract is for the entire project. I think you would look to see where the majority of the control is resting, and what the deliverable is, and I think there's still potentially under the self-employed situation there. If it's grey area, I think it'd be good for kind of a bit of dialogue with the designer in that case to just ascertain what their feeling of it would be. I mean, if they are not going to challenge it, then it's probably unlikely to be an issue if you were treating them as freelance. But I think you would need to again just record what the level of control is. Yeah.
Okay, last one or two. Are there legal employment law implications arising out of the requirements now to treat freelancers as employees? Potentially, yes.
So potentially, yes. The case law, which was with the Domino's pizza drivers, just didn't look at employment law rights. It looked at the taxation issues. But if an individual is an employee for tax purposes, it's likely they're going to be an employee for employment law purposes as well. So,
last one. If I employ someone on a 1-day contract in January 2026, for example, then they wait for 13 weeks for revenue to determine if they're meeting the threshold for the year. How do revenue come looking for the employer's 1.5%?
sorry, so you've engaged the person for 1 day and then 13 weeks later they come back and say is that the question?
Yeah, I guess it's like, I guess it's it's feeding back into that example of maybe let's use a crew example. So if we have if we have a crew person that we're now required, because we're very much the control is very clear. If we're now saying that person is an employee, and so we put them on payroll for a day for a get-in January 2026. And then that's moving through the system in terms of whether their auto enrollment will kick in in terms of meeting the threshold. Would revenue come back to you at some point for that 1.5%? I suppose I'm trying to imagine someone who's working for lots of different people and will reach their €20,000 threshold during the year.
I don't imagine revenue could come back and look for it retrospectively. I think what they would do is when they determine that it applies, they would notify whoever the employer was at that time or any future employers, and that they would have to operate it. I don't think they would retrospectively do it, but I'm not 100% clear on that. I'm sort of guessing on that.
Hopefully that will become, I guess the question then is, like, if somebody has lots of different employments, so they're moving around in lots of different organizations, and they do earn over the €20,000, there's going to be a point where they reach their threshold, etc. Like, which employer will make the payments, I suppose.
So I think revenue would probably be looking at kind of individuals' employment histories, and if they are moving around from job to job, but they're regularly making over €20,000 a year, then they will say that person is, once that person is auto enrolled, then they stay auto enrolled. I would think even if it dropped below the 20,000 for a year. I think it might be an issue in the first year they start earning, but that would be the only time that it would be. I think once they are auto enrolled, then it applies unless they opt out.
So in terms of budgeting going forward from the launch date, really, we should all be thinking about budgeting in the 1.5%. realistically on top of contract. Yeah, I think so.
Yeah.
Listen, you've been amazing, Bruce, answering all our questions, jumping between 3 different topics. And I know it's a lot of information to absorb, but we're going to share a lot of the resources afterwards so that people can consult these. And I think also as well, we do need to think about reflecting some of this information back to the Arts Council as well, so that, you know, in terms of the additional costs that are going to come in for people in terms of the capacity to deliver some of these things, and then also obviously the actual budgeting for auto enrollment, etc. But thank you so much. It's just been a really good and informative session, and I know people are saying so in the chat as well. So yeah, so we will follow on with all the resources. We'll email them all to you later on today, and they'll also all be up on our site as well, obviously. And thank you so much to everyone who attended, and especially to Bruce.
No, thanks for having me. Thanks. Take care, everyone. Bye.